May profits be upon you. Yes, that's my squeaky chair. Uh, I got a brand new one. I got to put it together. I'm sorry. Welcome to another weekly market forecast, and glad to have you back. Now, I briefly want to go over the U.S. dollar index because a lot depends on the U.S. dollar index this week. We have the CPI data coming out on Wednesday. All right. Monday, there's no red folders. All right. So there's probably going to be some low volume in the markets. Not a great environment to trade in. Tuesday, you probably see some consolidation and some misdirection in lieu of the CPI data coming out the following day on Wednesday. So be careful trading up until the news event, all right? Because that's a major one that could reverse markets like FOMC can and like interest rate decisions can. All right, so just be careful up until Wednesday. All right. Now, on as far as the Dixie is concerned, the U.S. dollar index, because Monday is probably going to be a low volume day, I'm looking for the candle to have a small range, right? That would mean a bullish fair value gap is likely to form. Let me put that there. All right. Uh, you know, that makes the likelihood of one forming because you probably have a small wick and then probably push up a little bit, and that'll give us this fair value gap for price to so we can have something to say, hey, price could stab into the fair value gap on Tuesday and then probably continue higher to the buy side liquidity at these highs. You understand the logic? So if the U.S. dollar index is bullish, then the indices like the S&P, the NASDAQ, and uh, the Dow will probably move a little bearishly, right? That only makes sense. So I'm looking at the weekly right now, right? And what do I expect? What kind of candle am I expecting? Well, after price found the buyers pushing up, this was a bearish candle, and the buyers stepped in, pushed price all the way up, all right, until the next week. And then that next week, we had an open high, low close, closing below the previous week, which would indicate that we're probably going to see more bearishness the week coming at least to take out the swing, the low of this past week, the very low of this past week. Okay, at the very least. All right, but we're probably going to have more bearishness to come, and that's why I have these sell side liquidity targets, the low hanging fruit here, the previous weekly low, and this low hanging fruit here, which is the swing low, which are right by these relative equal lows. This will probably see price consolidate once it breaks that. We'll probably see price consolidate down here. Oop, I don't know what's going on with this thing. All right, and then probably see price push back higher. Okay, once we take these important lows out. So we're going to keep our eye on that. All right, but I am bearish for the upcoming week, at least until Tuesday. I mean, at least until Wednesday. All right, so I'm thinking that it'll bear out. All right, and you can see the opening candle for the week has already opened, and we almost took that low out. So I'm looking for price to have a small range again on Monday, and then we'll see Tuesday come where price can move into this fair value gap that'll be left behind, and then we can see price hit that and use it to move slower. I mean lower to this sell side liquidity. Same thing with the Nasdaq. All right, we have the opening candle already. All right, I'm looking for price to give us this fair value gap here so that Tuesday comes, we can go up into it and use it to move past the previous weekly low and this swing low where we find some low resistance liquidity over here. All right. It's a pretty simple game plan with the yen with the Dow. We've already taken that low here, right? So price. So I'm really watching price to see if it would consolidate and then move into a fair value gap here, and then continue lower to the lower target down here, which is a good ways off, but the Dow can have some wild swings in it, man. So that's what I'm looking at with the indices. Pretty simple. Just wait for the fair value gap, uh, and during a low liquidity day, if you want to take buys up into that, you can. But I rather wait myself until we get a fair value gap, and then on Tuesday, a stab into it, and then a push below. Right, here we go. All right. If we look at crude oil has finally, uh, after this long time consolidating, we finally broke that consolidation, and you can see price moved higher. What was disappointing is there was a bullish fair value gap here that I was hoping price would come and tap into so we can get a very high probability trade up to the upside. But there was too much bullish. It was too bullish. Didn't quite make it. And then it went up. It did dip, like I said it would. And then we found some a speed bump, like I mentioned, that we would probably get a reaction at the volume imbalance up here. We did get that reaction, and price continued higher. And look at these three candles: one, two, three. Each one closing above the high of the previous one. This is a runaway gap, a breakaway gap. Sorry, some people call it runaway. I don't. All right, but there's a good chance price is not coming back into this fair value gap. There's a good chance. If it does, I'll be looking for price to turn around and move higher. But if it doesn't come back to it, which is fine, I will be looking at what's inside this candle here. I'm going down one time frame to the 4 hour, right? And I'm looking for a bullish fair value gap that price can trade back into. Now, oil isn't open yet, but I am looking for price because it's going to have some low volume, no red folders. I'm looking for price to do that. Give us that small candle range, right? Let me see if I can move that down here. It's not trying to cooperate. All right. So that'll be Monday's candle, and just like in the others, I'm looking for Tuesday to open down into the fair value gap that is left behind and continue higher. All right. I am bullish until we get a bearish break of market structure. I don't see any reason in this on the daily, at the very least, to take any sell positions. All right, we took this high out. We have to be careful when we take out highs because there are buy orders above this, right? And and there are sell orders. Those are the stop losses for the people who took sells. Price comes back all the way up here to trigger these buy orders, right? And stop out the people who took sells. And that's what happened over here. So price could continue to elevate past up to these highs. And that's what I'm looking for. All right. And that'll be uh, the buy side liquidity target come next week. Now, we need to start out with this one first. All right. But I'm looking at the ones above for the next ones, for the very next targets. Is that reasonable? All right. Is that reasonable? I think it is. Okay. We don't necessarily have to hit that the higher one, but I think we will. Okay. Now, again, I'm waiting for a bullish fair value gap to tap into so we can move higher. We'll see. We'll see come Tuesday. Gold. If we look at gold, last week, I will tell you straight up, I was looking for price to react to this bearish fair value gap and, you know, turn down or turn over. We didn't get that. Price ate through that fair value gap, the bearish fair value gap, and continued higher. Yes, it did. So we have to react to price action. And I was looking for buys afterwards. After it closed above, I was looking for buys after that. You just have to adjust, right? Ran into this bearish fair value gap up here. And you can see that we didn't get a close above it. Yeah, it ran past it, but we didn't get a close. Now, I'm listening to a bunch of guys tell me, people I respect, say, looking for nothing but buys, and we get a bullish fair value gap here. We'll get a bullish fair value gap here that's developing right now, and price could tap into that and continue higher. All right, but that would mean the U.S. dollar is weakening. There's a possibility that they could be going higher at the same time. All right, because this is if the inflation comes in hot, things might change up real quick. All right. Um, but what I'm saying is sometimes they're running in the same direction at the same time for a small period of time, but that's not the usual. All right. Usually, if the U.S. dollar is strong, it acts as a headwind to gold. All right. So, but we'll keep an eye on these things. There's a fair value gap that price tussled with last week on Friday. We'll see if it turns into a wick and starts turning down. Why do I think it might turn down? All right, because we look at this. This is supply up here. I'm not ignoring that. Took that high, swept that high, and created an area of supply. That's it. And we're running into it, and you see the wick already of respect to it. Now price continues higher and doesn't turn around and heads towards that high, that buy side liquidity. I'll stand corrected. But does this look impulsive to you? Look how long it took to get down here, and look how long it takes to get back up. This is 786 on a Fibonacci retracement tool. We go to the low, to the high, from the high to the low, moving all the way out. We should be around 786. Yeah, look, 786. All right. If price closes past that high, if price closes past this high, then I'm just wrong, and I'm looking for buys. All right, but I'm not saying I'm wrong. I'm saying just be careful of it. I'm not putting anything out there like you ought to take shorts. Don't just jump in shorts. I'm not saying that either, because I'm not doing that. I'm waiting for a break of structure that says that is the signature of price that, hey, we are going lower. All right. There's a lot of sell side liquidity to come and get down here. All right, and we are in supply. So I'm waiting for price to break above that. Right now, I don't want to take buys into supply. That's dangerous. All right. Is there something on the 4 hour that'll give us a clue? You know, that'll say, hey, there's a chance that price might not do that thing. Now, this is the demand. The bullish fair value gap that hasn't developed just yet. It's developing now. There's a 4 hour fair value gap here that price hit, and we haven't gone past that yet. Listen to me. Price starts to when price fills that in, and we see a bearish fair value gap, especially like a bearish engulfer from here. I'm telling you, get out of your buys. All right. I'm just saying, I'm just making a suggestion. All right. If we go up here and close above and take that what do you call it? Buy side liquidity, then We're probably going to take out that high. This uh, area of supply is looking ominous to me. All right. And I'm going to hold off on taking buys at this level until I see a break of structure either way. Got it? Silver, same deal. We're at a bearish fair value gap. It's considerably weaker than gold. And you see how long it took to get down there. That's an impulsive move. This looks more corrective. And this looks like the area that I would be looking for a higher low. All right. As we make lower lows, lower highs, lower lows, I'm looking for that to see if this pullback is going to continue or end and turn around. That's what I'm looking for. So, same rules apply. If we get a close above that high, where price is trading through, then I'm looking for price to come up to these highs and test that. All right. But there's some liquidity targets down here that I like, and price could come all the way back down here. All right. But I'm not looking at that fair value gap to hold. I'm looking for that fair value gap to actually fold because it's so low. And I'm thinking that once it gets down this low, we're probably coming towards these relative equal lows. Come on, man. Why are you going to do that in front of people? Huh? Dang. All right. So I hope I made myself clear with that. All right. And now, important, platinum. People have been asking me about platinum. All right. Let's look at the weekly. What I want to show you is prices consolidative. Consolidative. All right. I was hoping it would come down and sweep that low. It did, but it didn't trade through the low. All right. It didn't run the low. It just stabbed it, and swiped the liquidity. And you see this bullish move up to the upside. All right. That was last week's close. High above all of this, sweeping all of that good stuff. All right. I'm looking, and if you go down to the weekly, we have formed a bullish breaker. All right. I'm looking for price to come back into that breaker, which has a fair value gap inside to continue higher. That is until price takes this fair value gap out, we start to see a close below that fair value gap. We start seeing them running and not respecting bullish discount arrays. Hey, it's time. It's time to uh, just change our bias and start looking for sells. But right now, I'm looking for buys. This is a break of good structure here. All right. And we are above it. We've opened and closed above this structure. So I'm looking for price to continue higher. If it comes down into this bullish fair value gap, well, that'll be good because that'll be a great place to take a high probability trade to the upside. This would be a daily unicorn. Yes, it would. But I would, as soon as it comes into contact with it, I'm going down to the lower time frames to find uh, a nice setup. All right. Now, last thing I want to look at is copper. Copper is kind of structured the same way. All right, and we have bullish fair value gaps along the way on the daily. I'm bullish in this market. Period. End of story. And I'd be looking for buys. All right. And if we look at the weekly, we have a nice uh, bullish fair value gap developing here. On the weekly, you can see it. If we get that low volume Monday, then I'm looking for, you know, a fair value gap to form and price to dip into that on Tuesday and Wednesday and continue higher. I hope you get it. I hope I was clear in my forecast, and I want you to be careful. All right, this is going to be a tricky week, but I think it'll be a profitable one. May profits be upon you. Thank you for watching. Hit the like button. Do not forget to do that. Hit the boost button, and do not forget to check my my videos out in the comment section because I like to put updates there. I'll see you in the next video.